Hi, thank you for coming. Today's date is October 26, 2018. And hang on a second, I need to get some light on. There, that should help. Now let's get started on this trade right away. I apologize for being a little late. I had to clean up from an emergency that took place earlier today. So let's start our screen share and pull it up the trade so that you can see what I'm talking about. And this trade is New Zealand USD. New Zealand dollar, United States dollar. This trade went in for the first time on June 25th of 2018 as a buy. And it's a buy with a 0.01 lot size. It's the least amount on the lot size. And I'll explain why as we continue. My entry price is at 0.68310. My stop loss is sitting at 0.61310, and my take profit is sitting at 0.75310. Now let me show you why my stop loss and take profit are where they are. They are currently at 7,000 pips or $70, and negative 7,000 pips and negative $70 for my stop loss. A stop loss is basically the highest amount I'm willing to lose before the broker closes the discount. If you look at my balance of $1,000, it's not going to hurt me to lose $70. And that's the idea behind it. My take profit is also sitting at 7,000 pips or $70 profit. And the reason I have the 7,000 pip in both my stop loss and take profit is a 1-to-1 ratio to risk, profit to risk ratio, eliminating any extreme risk if the trade turns around. Now, when this trade was going on yesterday, last evening, it was sitting at, I've got it in my notes here real quick, at negative $35.20. So it was at 3,520 pips. Well, if you notice, we're currently at a negative $30.73, meaning I gained close to 500 pips. And I can't complain with that. There's nothing wrong with that. And the market closes on Friday at 5 p.m. Eastern. So we have about an hour and 37 minutes left before the market closes. Now, many people ask me why I don't put in more than one starting price. And the reason behind that is because this broker actually has an FIFO rule. First in, first out. So regardless of if it's a sell or a buy, if it's a second one, the first one has to be pulled out before you can pull out the second, third, or however many you put in. And it can hurt your margin level. Most people say, well, you can go down to 100% on your margin level. And you might think that's a pretty good idea. However, brokers don't like it. They don't like you going below a 500% because they feel you're losing too much, and they won't allow their money to be lost. They'll allow your money to be lost, and they will stomp you out, shut you down, and take your account if need be. So keeping your margin level at a minimum of 2,500 to my max. My minimum right now is at 4,729.71%. And that is in a comfort level. So I can set this trade and let it run, not have to worry about it. I might look at it maybe once a day, and that's it. So I can still have my 8 hours of sleep at night. I can still have my life the way I want it, and I'm not stuck to a computer screen or a smartphone. I can go do what I wish to do. There's no problem with letting it run. Many have asked me why I don't go lower than the day time chart, and here's why. When you go down to a minute time chart, how much can you see here? There's not a whole lot here that can be seen. Yeah, it's got an interest, but I couldn't tell you on a naked chart without indicators what it needs to happen, what you need to do. And because of that, being in a minute time chart doesn't work for me. A 5-minute time chart, there's still more information, a little bit more movement, but still there's not enough information on a naked chart, meaning no indicators, no trend lines, to be able to see how this trade is going to be going. There's just not enough here. Going into a 15-minute time chart, there's even a little more movement, and you can see a little bit more, but there's still nothing available for you without the indicators. And the reason I'm doing it without the indicators is because as I sleep, I go through grand mal seizures every night, clearing my memory. So I have no memory, and I would have to relearn everything, including the indicators, before I could trade. So I found a way to do it on a naked chart. And that's why I don't stay in the smaller time charts. Going into the 30-minute time chart, many of our traders will trade on the 30-minute or less because they have the indicators, they can see what's going on, and they're able to do just that without a problem. It's just not, it's extremely risky to do it without indicators. And you're putting a lot of faith into something that you may or may not know, because we don't know what we don't know. Going into the hour time chart is even more information. And if, say, you liken it to a movie that you just recently saw, many of those movies, the really, really classic ones, go anywhere from 2.5 to even 4 hours at times. And in that first hour, you're just getting half the picture, half the story. It's the same thing with a trade. You only get half the story. You don't have a clear, complete picture of what this trade will be doing. Going into the 4-hour time chart, now I have to be honest with you. Up to 2 months ago, this is where I would stop. This is where I would be without an issue. And then I realized it's only giving me not quite a year. So I didn't have the full picture. Then I hit on to the day time chart. And the day time chart gives me close to 5 years of the trend, the trade, its habits, its head and shoulders, its retest and breakthrough and support and demand and all of that in the day time chart. So I can actually look at this trade, because when we trade right, but we look left. So I sit on where the trade is at the negative $30.50 to 56 cent negative, and I go left to where it actually meets up back here. And doing that, I can see pretty close to what is going to take place and where it's going to go, which is about right here. Now, keep in mind that when you're trading without indicators, that things, like a good movie, always has a twist, and a trade can do the same thing. However, looking through this and seeing it retest and break through right here, and then it turns around and turns the other way. Before long, I'm saying probably another month before it turns and goes right back into our profit area, although it comes back into the stop loss area, but it will definitely be going and hitting our profit. Patience is needed. No emotion is needed. And consistency with this trade. After saying all that, we're going to stop our screen share and see if there are any questions. Oh, yeah, where I get my signals. Okay, well, there's 5 different areas. Stevenson Lindor, Warren Wright. These are both educators through iMarkets Live, that the only way to get access to them is to be part of iMarkets Live. And they will train you from beginner all the way through advanced, just making it simple and easy for everyone to get and understand. Christopher Terry, who happens to be our CEO of iMarkets Live, has had 25 plus years of experience in trading. And I would imagine with that record, he would definitely know what to happen and what kind of information to give to those if they just pay attention and follow direction. Tracy Walker, who happens to be my sponsor in iMarkets Live, has been running MBA as well as summits that will literally teach how to mark up your chart, how to know an entry price, how to know where to put your stop loss as well as your take profit, and how to get out of a trade. She will lead you in the right way. And it's an education that once you learn it, it will pay you for life. And the last place is Swipe Trades, which is also an app on our smartphones that is sent out through iMarkets Live. And to get access to that, you need to be a part of iMarkets Live. Any other questions? Going once, going twice, and gone. Thank you for joining me the last little bit of Friday before the market closes at 5 p.m. Eastern and opens back up on Sunday at 5 p.m. Eastern. And you go and have a fantastic weekend, and I'll see you Monday. Bye for now.